Hi, everyone. Welcome to our webinar today, Solving the Cash Crunch, Helping Small Businesses Access Check Funds Faster. You all are muted today, but you can use the chat box to ask questions or raise your hand for assistance. We'll get started now. So today on our webinar, I will be leading us. I'm Laura Cummings. I'm a director with CFSI, and I lead our small business financial health work. I'm joined today by Michael Sire, Victoria Doherty, and Alejandra Ruales. I'm going to let them introduce themselves. Michael, let's start with you.
Hello. So my name is Michael Sear. I'm Vice President of Consumer Strategy at Regions Bank in Birmingham, Alabama. My focus and my passion is on providing alternative financial services for the un- and underbanked customer. At Regions, we call that now banking. And I'm on the call today because I'm very excited to share how our commitment to financial inclusion has allowed us to serve all customer segments.
Great, thank you. And Victoria?
Good afternoon. I'm Victoria Doherty with Product Strategy at Fiserv. I've had some experience with other solutions in the market that did have some shortcomings. So all the research we've seen, like what CFSI has done on behalf of the Kauffman Foundation today, really made clear there's a need to help these small business owners and consumers with their liquidity and cash flow problems. And for us to watch them have to turn to places like pawn shops was not what those of us in this industry really wanted to happen. So I'm pleased to be able to work with Fiserv leadership to design a solution that can address all of those shortcomings in the market today. So in 2015, we launched a deposit acceleration product we call Immediate Funds. Our customers are financial institutions who then offer accelerated funds availability to their consumer and small business customers. So I'm pleased to be invited here today to lend some of my experience to the discussion. Thanks, Laura.
Thank you. And Alejandra?
Thanks, Laura, and thank you, everyone. My name is Alejandra Ruales, and I'm a manager in the program team here at CFSI. I led the research for this paper and work closely with Laura in the small business research. So I'm really excited to share with you all the topic for today.
Thank you. And thank you, Michael and Victoria, for joining us today. We really appreciate that. So we also want to know who's on the line with us today. We have a poll question here where you can respond, and then we'll follow up with an additional poll question just to get an idea of who's in our audience. So our first question is, what type of organization do you represent? So if you can select that on your screen, we'll just keep it open for about 10 more seconds. So about half our audience is other, making it tricky, but we have a representation of banks, credit unions, and research-based organizations or government here today. So pretty diverse. Our next poll question is, do you serve small businesses with cash flow challenges? So we know there are providers on the line as well as other kind of researchers, stakeholders, policymakers. We got a quick responses there. So just over half are serving those small businesses with cash flow challenges. Thanks, everyone. Here I'll go through what we can expect to cover today. I'll give you a quick introduction to CFSI and an update on our small business work, so you have an idea of what's coming up this year. So of course, the focus today is our research findings and our recommendations coming out of our report on the cash flow challenges arising from checks for small businesses. And Alejandra will lead that discussion. And our guests, Victoria and Michael, are here to share their experiences as providers of in-market solutions to address the timing delays that arise from check payments. As I mentioned, you can use the chat box to do Q&A. So as you have questions, feel free to use that. And then we've reserved some time at the end to do questions and answers. We're also recording this webinar, and we'll send that along to attendees with a link to our paper, which you can also find on our website. So you'll get that in your inbox within the next day or two. So for a little bit of background for those of you who aren't familiar with CFSI or the Center for Financial Services Innovation, we are a national nonprofit headquartered in Chicago. We also have offices in New York City, DC, and San Francisco. We lead a network of financial services innovators who, like us, are committed to improving the financial health of Americans through marketplace innovations. We do this by convening, informing, and advising our large network of companies and partners. Now, a little bit more on small business financial health at CFSI. We expanded into small business work beyond our consumer and retail specific work in the past couple of years at the request of our network members, who were seeing small businesses face many of the same challenges that CFSI is known for focusing on, such as income volatility, lack of savings, and challenges with credit. Our first report on small businesses identified the financial health challenges we observed and laid out our call to action for financial service providers, which is to analyze and measure the financial health of small businesses. We also highlighted the inherent connection between financial health of the individual or the small business owner and the small business, and last year released a paper really digging into the financial health challenges that we see that are specific to entrepreneurs or small business owners and are crucial in ensuring the success of small businesses. So right now we're working on a guide to measuring small business financial health so that small business providers like you all attending will have the tools and guidance you need to assess the financial health of your customers and clients. So we do all of this work with the support and guidance of our small business working group. So if you're a CFSI network member and you're interested in learning more about our small business working group, feel free to indicate that in the chat box or let your CFSI relationship manager know. Now I'm going to hand it over to Alejandra to dig into our research and recommendations.
Thank you so much, Laura. So without further ado, I am excited to share with you the findings of our research. But before, I would like to thank the Ewing Marion Kaufman Foundation, who were the supporters for this research. They funded the research and have been having great working with us throughout the process. So let me get started by what led to conducting this study. Some of you indicated a lot of you work directly with small businesses that may suffer some cash flow issues. And cash flow is widely recognized as one of the most prevalent issues that businesses face. And what we wanted to explore is this issue in the context of when small businesses get paid by check versus when they actually have access to their earned revenue. So if you think about it, when a business receives a check, it has likely already performed a service or delivered a product, but it doesn't mean that they can access those funds right away. So a financial institution identified that there was a high level of check cashing usage by small businesses, and that led us to dig deeper to understand why. We identified as an issue that most financial institutions don't provide immediate access to funds when a customer, in this case, a small business owner, hands them a check, which may result in issues for that particular customer. And as mentioned earlier, the Kaufman Foundation funded this research for us to look into this issue and offer recommendations. In terms of how the research was conducted, we started reviewing secondary research on check cashing solutions for small businesses and exploring some of the unique challenges that they may face. Additionally, we conducted interviews with stakeholders, including small business owners, community-based organizations, banks, check cashers, core banking services providers, and policymakers. And we used Kansas City as a case study to really understand the financial ecosystem in which small businesses operate. And really, we quickly discovered that the recommendations that we found are applicable in a broader context. So to get us grounded on some of the background research on check usage is not a surprise to all of us, I'm sure, has declined since the early 2000s. However, this declining trend has really slowed down between 2012 and 2015, which signals to us that checks might be around for a while still. This rate of decline has significantly declined, and that shows that some of the studies show that checks might still be around until 2030 or even longer. Really quick notes on the wording of this slide. Commercial checks refers to all types of checks except for U.S. Treasury checks and postal money orders. So not to confuse commercial checks to business checks. In terms of small business usage, again, many of you may think that checks are dead. The reality is that although many of the checks have faded out in many of our day-to-day transactions, they are still relevant on the small business context. We see that there's a sticky demand for checks because a lot of businesses prefer payments via check over other forms of payment, as they can accept checks without having any additional fancy equipment or signing up for additional costly services. And it's perceived, although old school, as simple and reliable in their minds. As you can see, 90% of businesses to date still accept checks as a form of payment, and approximately 50% of B2B transactions are made by check, with the remaining 50% spread across ETFs, prepaid cards, and ACH. Also, I want to encourage you to think about the last time that you paid with a check. Probably it was a while ago, but I know that the last time that I can think of that I paid with a check was to small business owners. The last time was to my plumber, and the time before was actually to my roofer. So I want you to encourage to think about these services and these businesses that are still around that could be accepting checks. Think about construction, repairs, cleaning, nannies, photographers. There's a wide variety of these type of businesses, so think about those to keep it in context. Also, just to give you a little bit of background on how the clearing of checks has changed over the years, there's a reason why financial institutions don't provide immediate access to funds. They want to protect themselves against fraud and the risk associated with non-sufficient funds checks. And to do so, they have to wait for the checks to clear. So this process has really evolved over the years. And to start, the checks had to be transported physically from bank to bank in order to secure that they would clear. That has evolved significantly since then with the Funds Availability Act of 1987. Basically, it helped to standardize the hold periods on deposits made to commercial banks. And what this did is to help make sure that there were hold times that people could refer to on a more standardized way. And later on, in 2003, the Check 21 introduced the idea of a substitute check, which is a special paper copy of real checks, and that allows electronic check images to be used by the financial institutions for clearing. In 2015, the Federal Reserve acknowledged the importance of improving the U.S. payment system and created a faster payments task force to modernize an effort to support the growing real-time payments environment. So this has been an effort, that they've had since 2015, and really it's not just about modernizing checks, but also modernizing the whole U.S. system. And with this, let me stop here and bring in Victoria for a question. Victoria, you've been in this field for a long time. How relevant is an immediate fund solution in today's payments market?
Well, thanks, Alejandra. You know my passion around this topic, especially when it comes to small businesses. So many of us have historically worked for a large firm. I don't think we have a good grasp on the importance of small business to our economy and really how we need to design solutions that can help them succeed. So a couple of stats for your audience here. 99.9% of all businesses in the U.S. are small businesses. So as an employee of Fiserv, I work for the 0.1%. So I need to make sure that I am designing solutions that really appeal to those small businesses in our sector. And they're responsible as small businesses. They bring in 47.5% of private sector payroll in the U.S. So really, without them, our economy would be crushed. Now, as Alejandra said, really, checks being the #2 payment type in the industry, only after ACH. And most people I talk to really believe that, credit and debit, they're used so often that must be a larger number because as consumers, we do use them relatively often. But transaction values are 5 times that of what is spent on credit and debit cards combined each year. So again, something we really need to find solutions when you look at the value of small businesses and how much they really love those checks. We need to design solutions for them. A lot of times, and I think Alejandra mentioned it earlier, why don't they just take different kinds of payment types, right? Well, everybody's heard these stats before, but let me throw them out again. 20% of new businesses fail in the first year, and 28 out of 100 that are started today will make it for 5 years or longer. The small business owners we work with are incredible folks. They're willing to try to and fail and try again, but that also means if they try to get a credit product, like a line of credit, a loan, or even applying for credit card acceptance, those prior failures can count against them. So for them, checks are easy, right? There's no need for any special product that they don't have to sign up for or have an app. All they have to do is deposit it in their bank or credit union account. So they like checks for a really good reason. Now, although the economy's improved in the past 18 months, our current clients have not seen a decrease in the demand for this service. So rather than, designing it as a deposit acceleration solution, we've got all the data our algorithm needs to make an automated offer of accelerated funds within the existing deposit system, and we don't have to use any personally identifiable information. So with all of the media coverage around data breaches these days and how important data can be stolen and impact people who didn't decide to put their personal information at risk, we wanted to design something that does not transmit any data that could be compromised. One last thing to mention, I know, Alejandro, you talked about the Fed Payments Task Force, and this is something that I'm sure Michael also keeps an eye on pretty quickly, but it is moving a little slower than we in the industry would like to. They've identified what they need to do, but a solution is several years down the road. So while they're moving in the right direction, and we certainly applaud them for identifying those issues and moving forward, our small business owners need a solution today. So when you ask how relevant it is to put this to market today, I think it's critical that financial institutions take a look at some of your recommendations.
Thank you for sharing that, Victoria. That's definitely great points, and can really hear your passion there for these type of solutions. And something else that I would like to bring up is how fintech players have really identified the need for this service, not necessarily in a check cashing context or in a check context, but in terms of how small business need access to immediate funds. Very recently, we heard from Square that they're going to start offering a new card for business owners, where they would basically be able to use the funds immediately as they receive them through the POS, from their POS system, if they use it. So to me, this is a very bold move and an interesting development from the fintech space. And really, again, to Victoria's point, makes us think about what we think of as traditional financial institutions can make to support small business owners. Again, to reiterate here that although there's a task force working on this, there's not really a lot of options for small businesses to have access to their funds immediately. And something to mention is that clearing times can vary depending on the type of checks. It could go from anything to 1 to 5 business days almost. Most of the checks clear from 1 to 2 days. But think about a business owner that needs to deposit a check on a Friday. If each after hours, they have to wait until Monday and Tuesday for that clearing time to occur. So that can really cause a significant cash flow issue for a business owner. Now, let me walk you through an example just so you have a better understanding of what are some of the options and what are some of the issues that a small business can run into when accepting a check statement. So in this case, Bob runs a construction company, Bob's Builders. Let's say it's a Friday and he receives a check from his customer for a completed job. He now needs to pay his contractors with the proceeds from this check. So how quickly can he get access to these funds? Well, the first thing that we need to acknowledge is that he can get paid either by a business check made out to Bob's Builders or made out to Bob as an individual. In the first case, if it's made to the business, the checks can be deposited into the business account. But if he does this, he would only have access to $200 in that day, and then he would have to wait for the funds to clear 1 to 2 business days. Now, remember, if this is a Friday, this means that Bob won't have access to those funds until Monday or Tuesday. Now, the second option in case of the business would be you would think that it would be going to the issuing bank or credit union. This is really not an option that businesses have. A lot of banks and credit unions prefer not to provide check cashing for businesses because it's difficult for them to identify business ownership. So now there's this third option. If Bob really needed that money to pay his contractors, he may be forced to use a check casher or borrow from others or other sources to fill in that cash gap that he's going to have at that point. And the fees for check cashers go up to 10%, so he has to make a decision if he needs the money right away, and there's no other sources. That's his third option. On the personal side, we see similar options. However, let's say that a customer made a check made out to Bob. Bob would be able to cash that check at the issuing bank. In this way, he would have access to immediate funds. However, there's a few caveats there too. Bob must be able to visit the bank within their business hours, and also it means time that he's taking away from his business if he goes to cash that check. Something else that I want to point out is many of you may be thinking, well, why is Bob not depositing this check into using mobile deposits? The reality is that he can do that, but still the funds wouldn't be immediately available for him if he uses that option. So when we think about the challenge of either not having option one or option one or two, it really comes about, it makes it difficult for the business owner to keep personal and business accounts separate. The business owner might need to access personal funds to cover the cash flow deficit because they're not able to access those check funds right away. So here I identified the challenges that we just walked through. There's fewer cashing options for the small business owner since he can't go to the issuing bank. There's a time commitment if the owner receives a check made out to the individual. And considering banking cutoff times, this chore would often conflict with the business hours, and would require the business owner to drive to multiple locations potentially. There's a risk of insufficient funds if the business. So think about this: if the business is unable to convert the check into usable funds quickly or deposit that check right away, particularly from customers that they don't know, this can create an additional fee for the business. It could be a return fee if the check doesn't clear, as well as a risk for the business to never get paid, to not be able to collect the payment for a second time. So these challenges can result in further financial health challenges. Accessing funds is important for small business owners, considering the fluctuating cash flows on the expense and revenue side. Just to give you an example of this, the JPMC Institute shows that the median small business only holds an average daily cash outflow of $374 and a daily cash inflow of $381. This really indicates that the inability for a business to access their cash on a given day can seriously affect their business operations. It can cause delays paying their employees, like in the case that we just discussed. It can cause delays paying their rent, placing an order, or any other type of business operations. Furthermore, as I explained earlier, the business owner might not be able. The business owner may be forced to use their personal funds to pay for the business expenses, and we know that this is a particularly acute problem for micro businesses who heavily rely on personal funds to respond to business needs. And you know, as you think about these challenges, here's where I think there's an opportunity for stakeholders who are concerned about household financial security and small business success to think about ways where they can enable businesses access their funds efficiently. And with this in mind, I want to now call Michael, since you have now banking right now. Can you describe for us when and how Regions saw a need for in-house check cashing?
Sure. So check cashing at Regions grew out of our larger commitment to financial inclusion, which was in turn a response to the first FDIC market study of the unbanked. And Regions saw this as an opportunity to serve more customers, diversify revenue, and bring people into the financial mainstream. So in order to do that, to bring in the unbanked customer, we needed to compete with check cashers, supermarkets, and other alternative financial service providers, and be able to serve non-account holders. So we developed a process to create a now banking customer that is decoupled from having an account relationship and is also compliant with all regulatory constraints around KYC, CIP, OFAC, etc. With this process, we can cash any check from any bank for any amount with no account required. And we use a third party that guarantees the items, so there are no losses, and that is passed back to our customers as no returned items. If the check turns out to be returned, our vendor will collect from the maker rather than the payee. So specifically as it relates to small business, to get back to your question, using your examples from before, the example of Bob, checks made payable to Bob, not Bob the builder, that was an obvious use case. Those checks are made payable to an individual, and I think anybody that works for a financial institution has probably seen that micro business, that single employee business will often go from bank to bank to cash checks made payable to themselves, so they get immediate access to funds, and there's no risk of a returned item. And so we offer that customer a one-stop shop. We can cash those checks regardless of what bank they're drawn off of. In the example of Bob's Builders, a check made payable to a business, you said banks won't cash checks payable to a business name because typically we can't verify whether the presenter is authorized to conduct transactions for the business. But as I mentioned, we use a third party that reviews and guarantees all the checks, primarily through data-driven models, but also when needed through a manual review. So if a check is payable to a business, we enroll the person who is presenting the check in front of us, and if the vendor can authenticate the item, we can cash the check made payable to a business. And that is used for businesses that want cash and leave, or customers that want to deposit funds into an account with no holds and no return items. So those are the two main use cases that we see in the small business space around check cashing.
Thank you so much for sharing that, Michael. That's great context for our audience. And with that, I would like to follow up with some of these stories, right? So to me, it's important to bring and show you what were some of these interviews that we conducted, and share with you some of these stories, so you can relate to the type of business owner that we're talking about. So this particular quote came from a an owner of a construction business. It was a pretty small construction business. And it was interesting because it's a construction / household repair business. And this guy is constantly running from job to job, receives a high volume of checks. And I asked him why. And what I heard back from him was that he works with a lot of older people with big houses. So he described that most of the payments he receives are by check. And the reason he's receiving a lot of those check payments too is because a lot of his customers want to keep track of household expenditures and also want to have some sort of record that they actually paid for that job. And the remaining 20% of payments that he received are split between cash. He said sometimes people are starting to pay with PayPal. But here what I want to highlight is that he hires contractors to help him out with the jobs, and when the day ends, he needs to pay those contractors back. So similar to the Bob story earlier, he really can't rely or wait for that check payment to clear so he can pay his contractors. So he does one of two things. He either goes to the check casher, they already have his payment information and his business account set up, and he said he pays around 10% of the check. It could be less than that sometimes, but that's around what he pays. Or he says that to avoid that fee, he takes funds from his personal account, which again brings to question this idea of separating personal and business accounts. This is obviously something that he has to deal with on a day-to-day basis when he does his job. So I thought it's an interesting story because it's very relatable. We see, as I mentioned earlier, a lot of the checks that I have paid with are for these type of businesses. So just wanted to share that with you. And, you know, Michael, obviously, sorry, I'm going to ask you another question right now in case that you were on mute. But do you mind sharing with us a story of a small business customer that currently uses Regions check cashing service?
Sure. Hard to limit it to just one, but our largest dollar volume business check cashing customer is a guy that owns a tow truck and handles towing for businesses here in Birmingham that, you know, maybe have problems with people parking in their lot. And as you can imagine, to get your car out of the lot, most people will write a check, and he uses the immediate funds availability and the check cashing service to guarantee the funds and not have the risk of chargebacks on the deposited items. We also have a lot of contractors, like you mentioned, people that maybe get a deposit for a job and then have to front money for supplies, and then when a job is over, gets a large lump sum payment and has to then turn around and pay off to a crew or to suppliers, and they'll use the service so that they can, again, turn funds quickly, and also without the risk of returned items. We had feedback from one business owner who had a check get returned for insufficient funds, and the customer, the maker, said, "Oh, you know, I accidentally wrote it from my wrong checking account. You know, I have two different accounts. I wrote a check out of the wrong one." And while that was a small mishap in the customer's mind, it was a huge mishap for the contractor. So, you know, he uses the service so that when he deposits the funds, there's complete peace of mind. He doesn't have to think about it again or worry that the funds could come back.
Thank you, Michael. That's definitely something that we can relate to as part of the presentation. And I would like also, Victoria, if you don't mind sharing a story of a small business customer. I'm sure that Fiserv has done a lot of different interviews, and you may want to share a story with us.
Absolutely. Yes, our clients do share stories like this as well. When we first turned on the service for one of our top 10 financial institutions, they had one small business owner. He owned a landscape firm who relies heavily on checks. And he used the service 137 times in the first 90 days the service was offered. He used it via the mobile app and was often doing the transaction right in the driveway in front of the house of the homeowner. But it gave him the access to those funds immediately. And as Michael said, that no recourse, you know, not having the worry that something could come back against his account should that check not be good or be returned, is invaluable to him. So clearly there's a lot of those small business owners and service providers that have found solutions like ours and what Regions offers, and have really been able to grow their business a little bit more and have that peace of mind and not have to be running around town trying to find a way to get access to their funds.
Thank you, Victoria. And yes, that's, I think that we could all share a ton more stories today, but I think it just really helps to contextualize what we're talking about here. And the quote that I just pulled up, this is also one of the interviews that we conducted. And what I wanted to highlight here is that this owner, she owns a virtual, or she called it a virtual assistant business. Basically, she helps other business owners too with scheduling, bookkeeping. She helps people go grocery shopping, format their documents, run errands for them, basically. And she gets paid by checks a lot. She also used to accept Venmo as a form of payment. But then she realized that it wasn't professional since it is a P2P platform. She didn't necessarily phrase it that way, but she didn't want her customers to perceive that her business and her personal accounts were combined. So she continues to accept checks, also cash. What I think is interesting is that she mentioned she doesn't really know when her checks are going to clear. So she prefers going to the bank and making that bank deposit because the teller usually tells her, hey, yes, your check might be in your bank account tomorrow, in 2 days. But when she goes to the ATMs, she thinks that there's a different timeline and she's unsure when those funds will be available. So again, for her, it's a catch-22 to go to the bank because she's spending time away from her business. So she would much rather take a picture of her check or go to the ATM, but it's uncertain for her when those funds will actually clear. So either she deposits at the bank, or in occasions, if she needs the money quickly, she doesn't go to a check casher, but she goes to a liquor store that cashes checks and pays an 8% fee. She said she's been going there for the past 5 years. And the reason why she stopped going to check cashers when she needed immediate access to those funds was because she was afraid of security. So this is something that I didn't think about originally when starting doing the research, but she said, if I go to a check casher, someone knows that I'm coming in with a check and I'm leaving with actual cash in my pocket. So for her, going to a check casher also represents a risk. And if you think about other business owners that might be carrying, in the case of our builders or plumbers that are doing a $5,000 repair, that's an easy target. That's something that I had not thought about before, as well as the uncertainty of knowing when a check is going to clear. So now that we've shared some of the context, some of the opportunities that are in the market, we came up with 3 main recommendations. The first one is to offer guaranteed immediate funds availability solutions for check payments by partnering with third parties. We know that financial institutions might not want to do this on their own, given the risk that is associated with providing the funds for a check before it clears, but the third party helps mitigate that risk. Helps mitigate the risk of advancing the funds to those clients before they clear. Offering expedited funds to small business customers at a reasonable cost. I'll let Victoria in a second here talk a little bit about that. But offering this service at a reasonable cost to the owner really represents an opportunity to generate new sources of non-interest fee income for the financial institution, while at the same time not having to incur the additional risk of upfronting that payment before it clears. But since we have Victoria and Michael on the phone, I'm also going to let them talk a little bit about this. So, Victoria, can you walk us through what an integration with a third party looks like, and why would a financial institution consider adopting this as an option?
Right. So, yep, we're one of those third parties with our solution at Fiserv, and we do prefer that it's, it is very automated, and we want it to be seamless to this customer, right? We are in an age where the expectation is, I don't want to go to a different app. I don't want to have to go through a special process. Just make it part of my current deposit process. So some integration is required. And not to get too technical, but really the main areas we'll need to address is the API call. So there's communication between the financial institution and Fiserv so that we can take a look at that check information and respond with whether or not we think this is worthy of an offer to that small business owner. The second part is much more around posting those funds, and that's something that's usually internal to a financial institution. But today, not a lot of them have that ability to really do what we call real-time post. So that's a piece that a financial institution would have to focus on to make those funds available immediately and spendable to our small business owner. And then for each deposit channel, they'd also need some screens added to their current deposit process. So like a few new screens in their mobile app to present the offer to them. Hey, do you want to have your funds available today for whatever fee the financial institution wants to charge? Or do you want to wait that, as Alejandra mentioned before, that 1 to 2 business days while the check does clear through the Federal Reserve? So giving them that offer, that's going to be a new screen, and then giving them a confirmation to the transaction. From a financial institution perspective, usually that posting of funds is the longest pole in the tent, is the way we think about it. But for our clients, usually that time to market varies from about 4 to 8 months, depending on what channels they want to deploy with. Now, I think Alejandra mentioned too, why would a financial institution want to do it? Now, clearly, there's a lot of opportunity around solving for small business owners. As I talked about, there's so many of them out there that we really want to assist, but there is something in it for the financial institution. You can offer this to these small business owners for a much smaller fee than the ones that we've been referencing in the study in Kansas City, right? We were talking about 8%, 10%. With this service, financial institutions can offer it at a much lower price point, drive market differentiation, and really get that share of wallet out of their current customers. I think the risk that we look at a lot of times today is around, you hear fintechs are going to, eat our lunch from a banking perspective and really take those customers away. Here's an opportunity for financial institutions to really provide a little bit more of a cutting edge service that's got that technology flavor to it, and really be able to keep that good relationship going with your small business owner.
Thank you for sharing that, Victoria. That's very useful. But yeah, as Victoria mentioned, this is an opportunity for financial institutions to consider partnering to offer this type of solution. The second recommendation is to communicate existing funds availability with customers more clearly. We heard from business owners and found actually through our own research that it was difficult to find exact information on check clearing times. So although it is required that institutions provide disclosures, most of them tend to be buried in funds availability agreements and are relegated to the fine print on deposit agreements. So in the case that I described earlier of the virtual business owner, she didn't know what that availability looked like. And I think that what we're trying to say here is that a small business owner with a limited cash buffer should be able to easily know when their funds will be available and when they will clear once they make a deposit. Again, part of our research found that some financial institutions will consider offering more than $200 in available funds if the depositor goes to the branch directly to make that deposit. But that type of information was only uncovered once we started doing some of those interviews and some calls directly to the banks. So really the recommendation here is to communicate funds availability clearly and visibly from the financial institutions. This can be done in the website, mobile applications, and even at different branches. And finally, our third recommendation is to extend check processing times beyond banking hours. Many small businesses say that they use check cashier services because of the limited hours of their bank branch, as well as their daily cutoff times for the same-day posting. So especially on Fridays, if we brought that example a few times, business owners are uncertain about when those funds will clear, and if banks or financial institutions, credit unions, are able to extend that cutoff time, then that might help the business owner, not necessarily to get immediate access to funds, but at least have one less day where they can have access to funds if the cutoff time is 8 p.m. instead of 4 p.m. or so. So those are the recommendations that we have. And with that, please don't leave quite yet. I'm going to launch a new poll, and then we're going to have about 10 minutes for questions. So we would like to know, we understand that these type of recommendations that don't apply to all type of financial institutions, but if it does apply to your financial institution, would you be willing to implement any of this? So we're going to go ahead and launch the poll now. Thank you very much for responding. And finally, we're open now for Q&A. Please feel free to type in your answers on the chat box. And if you want to ask questions to me directly or to Michael or Victoria, feel free to chat them. We're going to be here for a little bit. So we have got a question here. What is the next new financial product or service you see as a priority to further assist the small business segment? This question was directed to either Victoria or Michael. So do either of you want to respond?
I can go first, but I think it's applicable to both of us. I think what we're looking at from a service provider standpoint is still continuing to focus on liquidity and cash flow solutions. People don't always have a check and still sometimes have liquidity problems. So we're focusing on helping bring things like small dollar lending back to the financial institution now that the regulatory environment's become a little bit more positive in that area. It also doesn't decision off credit file information, so it should be a great benefit to small business owners when, say, their receivables are slow to pay, but they need to keep the lights on and make payroll and don't have access to something like a check for driving immediate funds. So that's probably my next step. How about you, Michael?
Yeah, I agree. I think liquidity issues are still probably the biggest hurdle for small businesses. And to your point, it's not always dependent on whether you have a check or not. I've seen small dollar lending. I've seen alternative data for making lending decisions, which I think is going to be big. I think lending or cash flow around receivables or on merchant transactions. I think these are all areas that we're going to see a lot of innovation and a lot of movement around with small business.
Thank you both. We're waiting to see if we get any additional questions for a moment here. Okay, so we got another question asking if we have any recommendations about where to start on better communicating the existing funds availability policy. And that's a great question. What we did as part of our research was to look at different websites from banks, financial institutions, credit unions, and we realized that there were some that very clearly displayed under their small business products. They said it was clearly stated small business funds availability policy, and the whole policy wasn't there, but there was a clear expectation on what small businesses should expect when they deposit a check at the branch, via mobile deposit, and by the ATM. And it clearly outlined what those cases might look like, and they provided a number in case that small business owners had that follow-up question or that was unclear. But what I liked about that clear display is that it was made, the solution was, the availability policy was displayed within the product that the bank is offering. And again, this is not necessarily a bank that is offering immediate fund solutions, but they did a pretty good job at setting the right expectations in the different ways that someone can deposit. Mobile, as you know, many customers are going into mobile banking. So as long as you're able to display that funds availability policy or set that expectation on a mobile would be great. And at branch as well. But we think that the most effective ones would be on via mobile or directly on the website.
Hey, Alejandra, it's Victoria. There's another aspect to that we've been running into with some of our clients, and I kind of call it policy versus practice, right? So a lot of times the policy may be clearly spoken to, as you just illustrated, but oftentimes the practice that takes place, say, at a branch and applying that availability policy can end up being different. So I would encourage financial institutions to really look into that on their own. When I was running product in that area, I'd call around to a branch and ask the question and see if that really matched what it was we published. So I think there's an opportunity still to tighten that just a little bit for our financial institutions.
I agree. Yes, thank you for bringing that up, Victoria. And we found the same thing, right? As part of the research, I called multiple banks and asked what their policy was, and in a lot of times the answer was, well, if you come into the branch, then we might be able to offer you, offer you a solution, which signals that more than the $200 would be available on that same day. So I think that it's important to look at that, because I wonder until what point that could represent a risk for even the teller by making a call on the spot and saying, we're gonna go ahead and process this check, and we're gonna give the full amount to this particular customer or not, instead of going through a due diligence process of actually reviewing the check and determining if the check funds are good. So that's an important point to make. We have about 2 minutes left, so I just want to make sure if anyone else has questions, please feel free to put them in the chat box. We'll be hanging in here. All right, so it looks like we don't have any more questions at the time. I want to thank you all for joining us today. I want to give a special thanks to our speakers, Victoria and Michael, for sharing their experience. It's definitely great to have both of you joining us today. And if you have any additional questions, please feel free to email us. As I mentioned at the beginning, or as Laura mentioned at the beginning of the presentation, you can download our report going to our website, and we will send you the recording of the webinar within the next day or so. Thank you very much, everyone.